Let's bring in Terry Haines, Head of Policy Analysis at Pangea Policy Advisory. Terry, good to see you. Thanks so much for joining us. Kind of headline-grabbing announcement, took some by surprise, others not. Do you think it will actually come to fruition?
Thanks for having me, Wilfred. What I think is, I doubt this will actually pass. Certainly Democrats will want something like this. But for me, the bigger story here is, markets apparently have shaken this off today, and there's a lot of happy talk that it'll never happen. The concern for markets, I think, is that it takes months to figure that out. And it's not up to Biden. Biden doesn't have very much political capital, particularly with progressives who, now that the barn door is open, are going to be interested in not only doing what President Biden has proposed, but be interested in doing more. Remember, a lot of these folks, who certainly are in the majority in the House and are powerful in the Senate as well, have wanted to do something that's a whole lot more than this, and to pay for a lot of these initiatives, and they'll be interested in doing that. The other reason why I think markets should slough off the happy talk, frankly, is because the idea is, the capital gains increase will go towards the so-called American Families Initiative that I think probably never gets passed. The problem here is that everybody's looking for pay-fors for infrastructure right now. So there will be this magnetic attraction to wanting to increase capital gains substantially, in part to pay for infrastructure. So markets not only aren't out of the woods on this, I think they're in the woods in this for quite a while.
I mean, Terry, to that point, I mean, no tax hike is ever popular. So you're always trying to pick between a set of choices that no one ideally would make. When you consider the enormous rise in the value of financial assets over the last couple of decades and how that has gone to the haves rather than the have-nots, is this that silly a proposal in terms of where you potentially are going to raise some capital?
Well, I think you frame it well, and on an intellectual or pure policy basis, it's not. But there will be powerful arguments both from Republicans, but more importantly from centrist Democrats, and there still are a few in Washington, that the last thing you want to do is start trying to raise taxes just as the economy is recovering, firstly. And secondly, everybody understands that that this is not going to pay for everything in completeness. Now, that said, I think one reason I think everybody's still going to be in the barrel on this for quite a while is precisely because of its revenue-raising potential, and large investors can join pharma in that regard, since senior people in Congress are also now re-pushing the idea that drug pricing regulation will come, which is estimated to raise another $500 billion over a period of years. So there's going to be an awful lot of this to come. What happened with capital gains yesterday is by no means a one-off, and it's not going away, I don't think.
Terry, the last administration cared a lot about what the stock market did. They paid a lot of attention and they took their cues. Treasury Secretary Mnuchin even said to CNBC once, it's a mark-to-market business. We see how they take our policies. Does this administration care? Would they read in anything to the sell-off on Wall Street or take any sort of cue from what's happening in the market?
Their bet is that the economy will go up substantially, and a great deal. You all talk about it constantly. So much so that the relatively small amount of pain here is not going to matter. That's their bet.
Shepard Smith here. Thanks for watching CNBC on YouTube.